Hello guys and girls, welcome to episode 8 in the Foundation series. This is where we get into how to place a trade. Now if you've been trading for a while, you already know how to do this, but if you're completely new to Forex, then we're going to show you exactly how you place a trade on your desktop through your broker and how you can utilize TradingView, of course, to help assist you with that. Now, a lot of people, they will be trading through their phones, but if you're a complete beginner, it's very, very crucial that you learn how to do this the right way through your desktop first, and then once you're comfortable, you're confident, you can of course use your phone as well. So let's dig into it. Right guys and girls, so we're at episode 8. So this is where I take you through placing a trade. Now, I can appreciate some of you that may have been trading for a while, you've come from different styles, you likely already have a broker and you do know how to place trades. But for those of you that don't, and there's a few psychological lessons that I do go over in this, so even if you do know how to place a trade, I think you'll really enjoy that as well. So I'm going to take you through more of this presentation, and then after the management section, we're going to get into a screen share of actually how to place a trade, how to manage the trade, and the thought process behind that with some psychology. But first up, let's get into calculating risk. So calculating our 1%. So before we discuss capping your risk at 1%, we should first cover where you'll actually be executing your orders. Most brokers will have an app and an online platform, and I'll show you that. So you can either do that on the desktop or on your phone. For certain brokers, you'll also be able to link your account directly to TradingView / manage your positions directly on TradingView. This in turn creates a very streamlined process. However, do your research and make that decision what's best for you. So calculating the 1% risk is fairly straightforward. However, it's important to start trading demo so you can become familiar with that process, and then you can move on to, of course, going live. But how do we cap our risk? Well, we cap our risk. The process of executing an order with your broker is a real simple process. After you've opened up your demo account or your live account and you begin to place a few trades in the market, it'll become like second nature to you. For those of you that would like a resource to help calculate your risk, you can go to my FXbook, features an online position size calculator, and can also be used via their mobile app. So I'll show you how to do that as well. What this does is calculate the units or the lots that you'll need to enter while placing the trade and ensure your position size is at 1% of your account balance. This will need to be done unless you're directly trading from TradingView, which features a built-in risk calculator. So let's go through an online version of the calculator for reference. We will do this once we get to the clip of when I show you how to place the trades, how to calculate that, so you can see exactly how that's done. So now moving on to executing a trade. So when we execute a position, placing a trade is a fairly simple process once you understand the basics of what you're actually doing when you buy sell a currency pair. A lot of courses will go off topic and go into detail where it really isn't relevant. This is the simple process. Our goal at Falcon is to make the process as simple as possible while providing sufficient knowledge so you can understand it and begin trading as soon as possible. Like most components of trading, executing positions becomes second nature, and it isn't something that you'll need to continually think about. But let's look at order types. So we previously touched on these order types. When you open or buy or the buy or sell panel in TradingView or within your broker, you will come across 3 different types of orders: market order, stop order, and limit order. A market order will execute your position at the current trading price, and you will be live in the position as soon as the command is given to the buy or the sell. A stop order in the same thing as an entry order, which is how it's referred to in Falcon. This is an order that will be triggered when price reaches a certain level that is set. The majority of the time, this is the type of order that you use within Falcon. So just like in episode 3, when you learned about bear flags and bull flags, let's say you're anticipating a reduced risk entry on a bull flag, you will place your entry order on the breakout. So you're anticipating the price will get that. So that's why we would use that order. A limit order is not generally used within Falcon approach. It's not something that we will cover as it's not relevant to the types of orders that we set when executing positions. These are things where people tend to do them when you're not going to be by the screen, and they set an order to trigger you in when price reaches a certain area. But generally speaking, the way we trade, we don't really need to do that. So utilizing the risk to reward tool. The risk to reward tool within TradingView is extremely easy to use. What the risk to reward tool does is it gives you a visual representation of the risk to reward ratio for the outlined position. It will allow you to set the entry price, stop loss, and the target profit price for your trades when you enter to buy and sell. And when you execute that, you know that you're exactly looking at the right price. And I'll show you how to do that on the desktop. This will be much easier to understand by digging into a quick screen share recording how to enter a position. Now, previously you was able to enter with certain brokers on TradingView, but not every single broker will allow you to do that. So it's important that I show you this on the desktop, and that way you can sustain that for whichever broker that you use. So now let's get into management firstly. So with management, being live in a position can bring a multitude of questions and emotions that you may have overlooked before initially placing the trade. As price action develops, you begin to see signs of either support or contradict your analysis. You begin the process of management. This is where a lot of emotions can creep in. Management is a process of removing risk from the table after the trade is taken, and then positioning ourselves to lock in that profit to variations of degrees based off the movement of price action. There's so many different ways in which these emotions can come in, but having a process to management is key. But how do we move that stop loss? The stop loss can always be adjusted at any given point after the trade has been triggered. So let's say you enter USD CAD long at 1.23000 with a 50 pip stop loss at 1.22500. Your order is live. You leave it for 4 hours, you come back to the charts, your trade has gained some bullish momentum in favor of the position, and you're now running plus 2% profit. Your stop loss is still in the initial position, and therefore you still have 1% risk on the table. But because your trade has moved to the upside and proved your prediction, right, essentially, you can now remove the risk from the trade by moving your stop loss to the initial entry price of the 1.23000 where you entered. You've now removed the risk completely. This is moving it to break even essentially, and this is something of what we call the break even method in Falcon. Moving your stop loss is simple and can be easily done through your brokerage or app or online platform, as well as on TradingView directly if your broker allows that integration, of course. The break-even method. The break-even method, this is a risk aversion management technique that allows you to remove our risk from the trade as we begin to see signs working within our favor. We remove that 1% risk we initially open the position as we see price start to impulse away from our initial entry point. This is a key aspect of the Falcon strategy and something that you will learn thoroughly as you progress through the content. There is no specific time after being entered into a trade in which you remove the risk. This is something that is discretionary and taught through various examples of positions that you'll see within the weekly content. And the reason as to why it's discretionary is because you'll never know that after an hour it will be in a good position to manage. It may be 2 hours, maybe 4 hours, may even be 24 hours until you manage it, which is what you're going to learn on a simple basis. Over time, you'll begin to see the specific circumstances in which that we wait to move our stops to break even, and in cases where we need to be a bit more aggressive and manage that accordingly. So now you have the management side down. What I want to do now is take you through a screen share of how to place a trade through the broker. You understand how to calculate your risk utilizing the calculated risk. And also I want to show you the psychology of how we manage a position as well. So let's get into that now. Hey guys, so now you've got your account set up, whether it's a live account or a demo account. Now let's take a look at placing a trade and how to do that. So first up, let's take a look at the market. So we're looking at dollar yen here on the 1 hour chart. This has been a forecast on our watch list for a while. And we have the potential for a order that we're looking at here. So if we look at this particular structure, we can see that we have outer structure, we've got the push down, and we've got this kind of running channel type formation, creating this mini double top for the sell. So naturally, that's going to be on our focus. So this is where we want to put an order to trigger us in if price breaks to the downside here. So what do we do? Well, we go to the 15 minute in the sense if we're going to refine this, or you can do this on the 1 hour. It's entirely up to you. But let's say, for example, if we just look at it from a double top perspective, quite simply, we would have our order on the break of a little trend line here. So let's actually look at how to size that up firstly. So now we've got this squeeze. We want to have our entry to trigger us in if price impulse is down. So we take our short tool and we put it below here and we look at our stop size and we look at our targets. So if we look at it from this perspective, let's say you're at work, you can't be by the screen, you can't really manage it. You will probably want to be on the safe side and have your stop above here at around 20 pips. Or if you're more active and you can do that, then you'd be looking at around 15, as we don't go any lower than 15. So let's call that a 15 pip stop loss here. Now, if we're going to have a 15 pip stop loss, and we have, of course, our first target there. We'll manage that accordingly, and then we've got a longer term target here. But if we just look at, we want that to enter and push us into the market, how do we fill that out? Well, firstly, if you click here, you'll see this toolbar here where you can lock it. You want to lock that price in, and we're going to go back to the screen in just a second. So now let's move on to the platform. Now, once you open your account, you'll have something like this, and then you can just launch it with the web app or the desktop. So this is Oanda. You can use whatever broker you want. It's going to be similar across the board. So now we're on our chart, and we're going to look to put a position on dollar yen. So as you can see with the pairs here, let's take a look. So on dollar yen, we want to go on the left side for the sell as we're looking for a sell. But just before we get into that, as you can see here with the overall balance, we've got £100,000 here on this demo account. So we know that we're risking 1%. So on a basic level, what is 1% of 100,000? £1,000. So keep that in your mind. Very simple, very easy to work out. You're risking £1,000 per trade. So if we click on this to look at the ticket, now as you can see, market order that I alluded to in previous episodes, that we don't really tend to use those. We're looking at an entry order, which some will call it a stop order, but it's exactly the same thing. So now we've got our ticket, and we're going to look to take it for a sell. So what do we fill out on this? Well, first up, we're going to look at our previous part here with the trade. So remember I said I locked this. If you double click this, we can then see the properties in here. Now, we want to get our entry price here because this is where we enter. So you're going to take this entry price, we're going to copy this, and then we're going to go over to our price here, and then just copy that in. So that's our price there. Our stop loss, what is our stop loss? So with our stop loss, we can do the same thing because you can see the stop level here, so you can see the price. So we just take this price, we copy this. You can just do it in pips yourself as well, so it's entirely up to you, but let's just do it like this. And as you can see, 15.1. So it's worked it out for us. Now, when it comes to take profit and these kind of things, setting these kind of take profit targets, we don't tend to do that. You can do that if you weren't going to be by the screen and that's what you wanted to do. But now we've got our entry price and we've got our stop loss. Now we want to look at the expiry. So we want to do no expiry. So essentially this won't expire until you remove the order, because it might take, it might take a few hours, it might take a whole day, and it's still relevant. So you don't want that to expire until you say so, and you want control over that. So now we've got our order. This is just, of course, going to be the reverse if we're going for a buy. Now we've got our order. We want to work out how much do we need to risk. So going back to the £100,000, we're risking £1,000 per trade. But how do we work that out here? How many units do we need? So if we go over to a position calculator, there's lots of different ones that you can use, but let's just select pounds for now. And we're going on 100,000. So £100,000 in your account. And then we're looking at a 1% risk per trade. Our stop is 15.1. And we're going to select dollar yen. So dollar yen here. And then as we calculate. So as we calculate, you can see £1,000, which is the 1% risk, and you can see the units, and we have lots as well. But let's go to units here. So if we take these units, so we copy that, we go over to here, and then we paste that in. What do we have? We can see that we have 1 pip equals 66.17. Now if you were to times that by this, then you have your 1%. So now we've got that price, and we're looking back at dollar yen to trigger us into the trade. We would set that order just a few pips below, because you can see prices in here. Then if we get triggered into the market, if price pushes down, we get triggered into the market. We've got our stop loss, everything's locked in, and then you've got it all worked out there. So this will get, it could seem confusing at the beginning, but honestly, once you've just placed a few trades, it will become easier and easier. So if you have to watch this a few times, that's absolutely fine. So keep that simple, then we submit. So now our order is on. So what do we do next when our order is on? So essentially we wait. We can take a look at our chart here, and once we get triggered in, then we will be within the markets. But now let's take a look at where your order goes. Right guys, so back to Oanda now, and as you can see here on this point, now of course you can minimize these and move these around, but this it says no open trades. Why is that? Because it's in the orders. So look at the tab here. So in the orders, this is pending, and that is because we're not triggered in yet. So if we get triggered into the trade, then of course this will just push in, and then we'll be in the position. Now, we manage this, generally speaking, on TradingView, and I mean from an emotional perspective, because from a sustainability perspective, when you've got small amounts of capital on the table, it's fine. You know, you see the money going up and down, it probably won't affect you as much. But when you're risking more and more and it gets larger and larger, the emotion of having, let's say, £10,000 running and it pull back to 2,000, or 20,000 pull back to 12,000, you're almost trading emotionally. You're P&L, you're seeing go up and down, that kind of stuff, and it creates more emotions than good. So again, once that's in, it'll be in your trades. At this point, it's in the orders, and generally speaking, you know, you can just take a look at it on your trading view and then manage it emotionally in there. You don't need to keep looking at the money, dollars or pounds going up and down, etc. So keep that simple. This will become easier and easier when it comes to being in the trade. And as you can see, we may get a little push from this bit of movement here, so it's perfect. And remember to keep that locked so you're not moving it around and you're not getting confused as to maybe why you're in the trade. And when you place a trade, what do you do now? Well, you kind of just sit back and relax, in the sense that you've done the hard work, you've done the forecasting, and you let probabilities play out. If it's a loss, it's a loss. It doesn't matter. You've risked 1%. Let the probabilities play out. If you lose 1%, then guess what? You know your edge is playing out, because your average risk reward is a 3-to-1. And in this situation, we're looking at 7.2, maybe potentially a lot more. So you imagine, let's say this hits target, we hit about 7%. Imagine you then going to place another trade and it takes a 1% loss. Does it really do anything or a dent into your account? Not at all, because you're sticking to the numbers. Now, another thing that I would add here as well is that, let's say, for example, we get tagged into this trade, it comes out, tags us out for a loss in this area, and you don't have it above here because you're maybe actively managing this a little bit more. What would we do in that sense? Well, this is just another little lesson within here. What I would be doing is seeing this as a double top, and then I would re-enter. So you've got two options, as I mentioned. Either have it above here because you can't be by the screen, or if you want to manage this more actively, then of course, if you're tagged out, then you just take another entry here, and then you size it up accordingly at the top for the double top, and then you do exactly the same process. So keep that simple, guys and girls. Make sure that you've got your account open, and remember, you don't really want to be staying on demo for too long. And again, this is the easiest part of it. It may seem a little bit confusing at the beginning, but once you've got it on lock, then you know what you're doing. You know, at the beginning stage, you might be thinking, can I just place trades through the app? You can get to that stage, and generally speaking, myself, coaches, many people, traders that you speak to, they'll end up placing trades through their phone on the app. Really and truly, it's quicker and it's easier. But at the beginning stage, I recommend you do this through your desktop, and then once you actually know what you're doing, and then when you're on the go, etc., and you're comfortable with it, then of course you'll just be able to do it on your phone, because it's just more efficient. So again, you've got our stance on the market order. Make sure that you're not setting too many of those, and you know our reasons as to why, but more so entry order, because at this stage, this is the same sort of thought process that I'm talking about. When I'm going back and I'm looking at this, and let's say I've got something else to do, imagine if I was always had to be by the screen and I wanted to put the market order on, I wanted to be in the market. There's too much emotion in that. Now I can kind of look at it and say, well, I've done my forecast, there's the impulse, there's the running channel, does this meet my trading plan? I go through the checklist, have I sized up my risk? Am I sticking to 1%? Do I have the target? Am I looking at the bigger picture? Is this in alignment with the higher time frame? You know, you just ask yourself these simple kind of checklist questions, and then you look at the bigger target and say, well, what else do I need to do now? Nothing. So you can actually see the placing part of the trade is actually a very, very small section of it. But the analysis beforehand, the planning, that is the more crucial part that you need to focus on. And once you do that, of course, you've got scale in mind. So guys and girls, go and test this out. If you've got an account for the first time, and you'll get it in no time. And if you do need any further assistance or help in working anything out, reach out to myself or the coaches or anybody in the team or anyone in the community. Right guys, so going back to the original entry, so we've now been triggered into the trade. As you can see, we just moved above this kind of double top area that we was looking at, our entry set here, and then looking for that push to the downside. So now we're triggered into this, and we've closed on the 1 hour chart. So let's just clean that up a bit, as you can see, and even removing the ray. As you can see, we've got a nice close there, which is a good sign. And then what we can do is just adjust this ever so slightly. Now we've actually got the angle of the structure, and we can see it gives us more of this kind of expanding type formation, but nevertheless still exactly the same thing. You can see, of course, we've got this overall channel within it, which gives it that running channel type feel, which is what we alluded to previously. So same type of deal. And at this stage, this is what I wanted to bring your attention to. So if we go back over to Oanda, as you can see, we're just running in here. So now we've gone from orders to trades. So now we're in here. This is moving up and down, as you can see, right? Now, this is what I was talking about, is not trading your your P&L going up and down, things like that. Otherwise, you're constantly in this mind frame of like, right, I'm up this, I'm up that. Now, you imagine that extra zeros and even more zeros of going up, down, you'll give yourself a headache. So that's why we manage it in a trading view. But again, we've thought that we would really go into this position as much as possible as it goes through, so you can understand the thought process, the emotion. What we're actually looking at here as well is this double top area. So one thing that I was going to do is that if this pushed up to this outer structure and didn't trigger us in, I was going to show you how to move the order up. But quite simply, I can briefly show you how you would look at that. So when you would go to your trade, you would modify that in this area here, but we're not going to modify it now because we're in the trade. And then let's say, for example, you was going to re-enter the position up here. Let's say you had 15 pip stop and it was at the top and you was going in again. All you would do is double click that, and as you can see, the entry price, you would just copy that entry price and then put that back into the readjusted one. So then all it would do is move your order a little bit higher, so you just get in at a better price. So super simple. And again, let's see how it plays out and I'll keep you updated. Hey guys, so just updating you on how to deal with this sort of position. So now we've pushed down now in this trade. As you can see, we're running about 1.7, now it's pulling back just a little bit, so about 1%. But at this stage, we've broken to the low of the structure. So in case that we don't take an unnecessary loss and it pushes out and something changes, this is where we would utilize the break-even method. So generally speaking, when you're over 1% profit, it's not an exact science that it's 1%. You utilize your initiative of the structure, but as you can see, we rejected this area of this pattern. So this is where we would want to move that to break-even. So how would we do that? Well, going back to the tool. So if we double click that and go to the properties, we can see this is our entry price. And with our entry price here, we want to move it to break even. So we copy this, we go over to our platform here, and as you can see, we've got the trade running. Then we want to modify that. So as we modify that, we go into the stop loss section, and then we paste that in, and then you save your changes. So now we've modified the stop loss. We've secured that we are at break even. So at this stage, we know that if this pulls all the way back and it takes us out there, we'll be taking out a break even. So rather than having your 1% open your £1,000 essentially, you'll be taking out a break even. So you're not winning, you're not losing, but essentially you're protecting yourself. So it's important to understand the psychology here from what you've learned with the structures. You're protecting yourself in the essence that if it pulls back up, then guess what? You take a break even. You can make a more concise decision around this area to ask yourself, well, if I do take a break even, what will I be looking at next? This is where the forecasting comes in. So then you're prepared to be able to take that. Alternatively, if this pushes down and we get more continuation and we push lower, then what we'll do is exactly the same thing. We'll look at the price and then we will double click, we'll get our properties, and then we will then paste it the same way. So then you can do the same and lock in profit. So that is the easiest way to do that. Now, like I've said before, once you get more comfortable, you can do it on the app and it's even easier. But at this stage, just so you understand how to do that, where to click, that is how you do that. And again, I'll potentially in this episode, we'll keep you updated as much as possible for how long this plays out. But again, make sure that, again, another reason when you're looking at, £100, then 400, 500, 1,000, you imagine that at then 10,000 and 15,000, if you're constantly watching things go up and down, you'll get very, very emotional. So it's important that you're not trading it through here and you're managing it accordingly. Because when you look at the structure, you're basing your decision based off of what the structure looks like. So you're not bringing in all these emotions. But imagine looking at money going up, down, up, down. That's where a lot of people fail as well. So it's important to understand that concept. So that is it for now, and we'll reconvene. And as we drop lower, if we do so, we will lock in profit. Right, guys and girls, so just a quick update on this trade of the thought process as to what we will do. So it's actually a Friday, and it's really important to understand this. There's a myth that, you shouldn't trade on a Monday, shouldn't trade on a Friday. These are just old beliefs that are not really necessary if you understand the true nature and structures of the market. But looking at this structure, to just break it down, let's clean this up a little bit. So we're running at about 1% at the moment on dollar yen, and it's a Friday. So what do people think? Well, should I close my trade down? Do I want to hold trades over the weekend? Again, it's a very limited mindset. Remember, if you're trying to bank big percentages and profits, then you're going to hold your trades over the weekend. You don't need to close things down out of this fear. Again, it's just another old myth. So when we look at something like this, remember we're at break even at this stage at the moment. So yeah, literally just over break even. And as you can see, even just looking at this structure here, you can see it's forming almost a correction. So you see how this correction previously, like so, steeper correction, push up, steeper correction. So this could move up and take us out for break even. But at this stage, we're just going to hold this. Whether we stay in over the weekend or this comes out and takes us out with the spread, worst case scenario, it's a break even. We're looking at the bigger picture here that can be moving all the way to the downside with our first solid target for around a 7-to-1. So at this stage, we won't really be doing anything apart from seeing how this corrects. So you can see the price action moving sideways. So again, we may even form another continuation to give other traders not already in an opportunity to get in, or we will scale into the market and build on the position that we already have. So you can see how keep things simple. You know, for closing it down now just to bank that 1% is just an insecurity in the mind, and it will hold you back in the future. So at this stage, we'll keep it as it is. If it takes us out for break even, it is what it is. We will then look for another re-entry once the market gives us permission and presents itself. So all is well, guys and girls, and I hope that teaches you more of a live thought process on how to do it and how not to overcomplicate it, but more so the message of, do I need to close my trades down over the weekend? To be honest, it's a personal preference. Some people do, but if you really want to bank percentages, then you're going to need to learn how to hold your positions. What's going on, guys? So back to the management side of things of this particular trade. So as you could see, we entered into dollar yen. We pushed lower, like I said about the weekend, in terms of it's okay to hold your trades over the weekend. This is normally a myth. But what about when you're in profit and you want to lock in profit? So if you remember last time we moved it to break even, let's just run through what's actually happening in the markets right now. So if we take a look on the 15 minutes, and we can see this is where our original entry was. And we did actually have an entry here, but it was slightly late. I was already asleep at this point, so didn't manage to get this 15-minute flag. And again, this would have been the scaling, right? So we would have been looking at this for a break on this angle. 15 would have been more than fine. And at this point, this would be at break even, and it's running at about 1% profit. It was running at about 1.7 at one point. But again, that's just a trade. You're not always going to be awake, and you're not going to get every trade. That's fine. But let's go to lock in a profit. So if we look at from a management perspective, you can see that we are forming another corrective structure here, right? So we can see this. Does this give us any style of pattern that we can work with? We have 1, 2, we have these highs here. We can create a continuation. This is almost looking like to create a continuation. We have a tiny little piece of structure here, and this is creating its own. So because we don't know that this will create another, correction and move lower, and this could move back up and be part of a bigger flag, this is why we don't want to be naive and give too much profit back to the markets. Why? Because this is not a longer, larger term sell. This is just a short term move that may break the channel or may just stop around here and push back up. So with that being said, we don't want to be too lenient in this stage. We're not approaching this from a longer term perspective. This is just more so aggressive at this point, and it's been falling quite correctively at this stage. So I want to look at this area here. This is where I want to lock in profit. This is the last low from when it started that correction. So because we've broken that low now, this is really where I want to lock in my profit, because at this point, if we come up to this area here, it's likely breaking above and a lot higher, and then you're just giving back unnecessary profit. So this was the line in the sand for me. So now we've done this. You can see 1.8 risk to reward. So we risk 1%. We're currently running at a little bit more than that, but we're looking in 1.8 because that structurally makes sense at this stage. So if I double click that, and you can see my profit level. So my profit level here is 109.091. So if I copy this, so I've got this price. We go back to Oanda. So we look at the trade. So as you can see, we risked, of course, £1,000 position. We're just running over 2.3% at the moment. We want to lock 1.8 in. So if we go to modify, and then now at this point, we want to go to our stop loss. So originally our entry point is where we put this in. So as you can see here, 109.371. You can see that's faded, right? That was the price we entered. And now we've put that into our stop loss because we've moved our stop loss down to break even. Now we want to change that, and paste in the next one. So now we've stopped that. So as you can see now, we've got our new price. So you see how on here, we've now moved to the low. So you see, just like on TradingView, this was the correction. We've now moved it to the low. We've got this point here. So as you can see, if we do reject, this is just enough above as the line in the sand essentially, because if we reject, we may go up again for a third touch, then we can look for a scaling. But at this point, this is the line in the sand. We've locked that in. And now you can walk away in a sense knowing that worst case scenario, if it pulls back at 1.8, you go back, you reconvene, look at the structure, and then at that stage you just want to lock that so you know exactly where it is, and you can't move that now. So it's locked in, then we look at it structurally, and we're not managing again on the platform, because again, you're just watching money go up, go down, etc. It becomes a headache, especially when you trade more capital than this, it can be even more. So it's really just about having a process. So you see how we're only really going here just to modify things. And again, you can do this on your phone. 99% of the time, I personally do it on my phone. A lot of traders do the same thing, but I'm showing you this process on your desktop to get used to it first. This is how you would do that and how you would take the data from here. So keep that as simple as possible, guys and girls. And again, at this stage, how we would look at it is in the sense that, do we create a deeper correction like so? If we create another flag, as you can see, we've got just enough above to acknowledge that, and then we would just scale into the trade. If it suddenly turned to the upside aggressively, then we know this corrective structure is just repeating itself on a larger scale to potentially push up to here. And as you've learned in the episode 3 of the structures and patterns, we may be just getting a multi-touch 1, 2, 3 ascending channel, and then we go down. So can you see how the thought process behind it here is, this is not me just showing you how to manage a trade or anything like that, or place a trade. This is more so, well, why do we do that? How do we do it? What would the thought process be? So hope that helps. And again, if we get taken out for here, I'll update that. If we go a little bit further and we scale in, I will show you accordingly. So I hope that helps, and I'll see you in the next clip. Right, guys and girls, so we're now back, and as you can see how simple you need to keep it. It's really just about following that simple process, and it becomes easier and easier. And honestly, what you'll find is the majority of the times after you've placed it through the desktop, you get comfortable, you'll end up managing it on your phone anyway, because the reality is you're probably at work, working a 9 to 5, you may be on the go. This is why you need to know how to do it, but this is how simple we keep it. And hopefully you understand now, look at where we moved it to break even, why we moved it to break even in that position. This is how simple you need to keep it, and utilizing the orders that we outlined. So setting an entry order, letting price trigger us in, and letting the market come to us is the most important thing. So if you have any further questions on that, of course, reach out to myself and the team, and people in the community are always happy to help. Now let's take a look at exiting a trade. So previous trade on dollar yen, that resulted in 1.8% profit. But there are 4 main ways that you can exit a position when you're trading the Falcon Star. You can set a profit target for the trade, which will trigger you at a predetermined price. It will take you out for a set amount. And as we said previously, you may do this as you go to sleep or you're traveling, etc. It's not the most popular, but it can be effective. You can exit the trade manually by simply closing the entire live position down. This is done if you're happy with taking profit or capping your stop loss where price currently is. We use this sometimes, but the majority of our exits will be from stop trading or profit targets. Truth be told, it would be very, very rare that you'll manually close a position down. Something would have to happen to do that. So it will be a very, very small segment that you'll rarely do. It's more so trailing your stop loss. You can trail your stop loss and have price fall back down to be taken out for the trade. This is done if you expect price to continue further, but you want to make sure that you lock in profit, of course. You can leave your stop loss where it was originally and be taken out for the full loss if price retraces. Now, when you enter a position, it's unlikely that you're going to move it to break even straight away unless price permits that. So there are a few ways that you can manage the trade. The most popular is trail your stop, or you move it to break even when the time is right. Profit targets, they can be used for some people, but it really depends on your circumstance of when you're placing the trade, if you're going to sleep, what time zone you're in. There's a few other factors, but nothing to overcomplicate. What I want to do now is talk a little bit about market exposure. So we spoke about it in risk, but I want to go into a little bit of detail here. So market exposure simply refers to the current risk that you have on a table and your exposure to individual currencies. Opening a second position before you've moved the first to break even results in a total of 2% on the table. So you may only be risking 1% per trade, but if you've opened multiple positions of, let's say, 2 or 3 or 4, then now you're risking 4%. If you've got 2 positions, you're risking 2% without moving the first one to break even. Following the 1% rule, you should always have your first position move to break even before entering a second trade, especially in the initial learning stages. Now, as you become more developed as a trader, of course, you can increase that. My maximum threshold for myself is 2% threshold at one given time. So I will only have 2% across the board, not on 1%, not putting 2% on one trade, but 2% exposure in the market at one given time. But in the earlier stages, if you're new, I wouldn't do that just yet. You can do that over time once you gain more experiences. So market exposure. Currency pair exposure is another component of being exposed to the market through risk. If you're in USD CAD long and you spot a setup on Aussie dollar, it is most definitely okay to take that position. It is the awareness that you're trading two US dollar denominated pairs that is the importance. So for example, if the US dollar weakens, then that will affect essentially both of the pairs. So it's important that you understand you're still trading the US dollar, even though you've only got 1% open per trade, you still almost got 2% open with the same currency. So each currency pair has a certain correlation within the markets, and another one of these correlations must be taken into account when performing analysis and getting involved in the market. I wouldn't be too caught up into correlation, but it's important to have some awareness on it. Correlation is something that is important to take into consideration. However, it's not what we focus on heavily within Falcon. It is the other strategies, but within Falcon, we understand that a pure and simple perspective is all that is needed to achieve the top results. And often when we try to correlate too many things, we end up being paralyzed and we don't take trades in the first place. Simplicity is always key. And to have that, remaining that in your focus as you progress through the content is definitely an important thing to remember and to take note of. If our analysis points in that specific direction, don't allow trade biases or correlation to affect your decision making. Take the trade on its own merit, because you never know how long another currency pair that you might be correlating could correct for a long period of time. So take the trade on its own merit. So that is market exposure. The last thing that I really want to talk about here is a trading plan. One of the most important things that will happen over time. I wouldn't rush this process, and you need to learn before you can build a trading plan. So if you're going through the foundation series for the first time and you just started to learn the strategy, you don't need to build this plan straight away. It will happen naturally. A trading plan refers to a written document that covers all aspects of your trading regime, from entry to management through to psychology and how to perform at your best. By laying out a set of guidelines and rules for yourself that are in line with the Falcon strategy, you begin to learn one of the key components of becoming a trader and becoming a successful one that is maintaining that consistency. A plan ensures that you're applying the same set of guidelines for the positions that you take, in which that then can be tweaked as you gain experience from the collected data. Now, with your trading plan, it's important to realize that one trade's results is irrelevant in the grand scheme of things. Your edge determines your profitability, not the result of just one position. So it's always important to follow your plan and not become emotionally involved in other traders' journeys. Remember, not one bad day, week or month is going to make or break you as a trader. It is in the long-term edge where you'll see the results. And therefore you must stick to mastering one way of trading. Through constructing a trading plan, you'll be able to ensure a strong start to your journey in the markets and have a basis of knowledge to build off of. Now, more into the trading plan. How to build a trading plan is covered in Falcon Processes episode 2, which breaks down all of the key components of my personal plan and provides you with a template that allows you to create your own personal plan over time. Remember, I could give you a trading plan. You could have my plan, you could have the coach's plan, experienced student's plan. It's not our current plan that will essentially make you successful, which is why you need to build your own, which is why you use this as a guide and you develop that sense of backtesting and understanding of the strategy. Aim to go through the content and get a feel for how we trade within the markets before you go in depth in building your own trading plan. You may use mine as a guide just at the beginning as you start to begin and have that feel for the types of positions that fit well with your style. It's recommended that once your plan is built, you should print it out and have it for reference when performing your analysis of taking positions within the market. Essentially, it's a great checklist, and eventually it becomes second nature to know that you're taking the right trades. And once you have that trading plan, it's one of the most important things that you can do, because once you've got it there in front of you, you can really actually take a look at the plan, reference it, and know that you're looking at the right thing and you're focusing on trades that are congruent with your plan, because you wouldn't walk into the gym without a plan unless you weren't serious, right? If you're serious about your fitness, you would have a plan to follow, whether that be training plan, or whether that be a macro plan of following your diet. It's the same with trading. You have to have a plan that you follow on a consistent basis. Right, guys and girls, so we're now at the end of episode 8. So hopefully you've enjoyed that, not just placing a trade. I did want to add in a little bit of psychology and how to manage the trade, why we was managing the trade. So very, very important that you've really dived into those key things that I was mentioning in the moment, because that's what it's all about. It's really understanding not just the technicals, but the psychology behind it. And hopefully you're fully confident how to place a trade. And if you do need any assistance, of course, you can always reach out to myself, anybody in the Falcon team, and of course you can always contact your broker and they'll be happy to assist you as well.